Welcome back to the channel, and thank you for joining me. I'm Algabot, your guide to the world of automated trading systems for MetaTrader 5. In today's lesson, we're taking a close, educational look at a strategy called Tillson Trend Resumption. This expert advisor is built around the Tillson T3 moving average, a smooth, low-lag indicator, and it uses a trend pullback continuation style. By the end of this video, you'll understand how the strategy reads a trend, waits patiently through a pullback, and looks to re-enter as momentum returns. Let's dig in and learn together. So what exactly does this expert advisor do? The Tillson Trend Resumption strategy is a trend-following system with a patient, pullback-based entry style. Rather than trying to predict tops and bottoms, it aims to join a trend that is already underway, but only after a brief pause, when momentum shows signs of returning. It's designed to be traded on a single time frame of your choosing, and it suits trending markets such as major foreign exchange pairs, stock indices, and metals like gold, typically on intraday to swing time frames from 30 minutes up to 4 hours. The engine behind the strategy is the Tillson T3 moving average. The T3 is a refined, 6-stage smoothing of price that uses a tuning value called the volume factor to track the market closely while filtering out much of the jitter you'd see in a raw price line. The strategy runs two of these lines at once, a fast one and a slow one, and it studies the gap between them, which it calls the spread. Importantly, this is not a simple moving average crossover system. The strategy doesn't just wait for the fast line to cross the slow line. Instead, it watches how the spread expands and contracts, or breathes, as a trend develops and pauses. It's a more nuanced reading of momentum. Who is this style suited for, in an educational sense? It's aimed at traders who prefer trend continuation over reversal trading, who value a rules-based, fully symmetric approach that treats buying and selling identically, and who want to find risk on every position. As always, this is a framework for understanding market behavior, not a promise of any particular outcome. Trading carries real risk, and losses are a normal part of the process. Let's move on and see precisely how it works. Let's break down exactly how the Tillson Trend Resumption strategy makes its decisions. At its heart are two Tillson T3 moving averages calculated on the closing price. One is fast, with a default length of 8, and one is slow, with a default length of 21. The Tillson T3 is special because a volume factor, set here to 0.7, lets it hug price with much less delay than a plain moving average while staying smooth. The strategy then watches a single value called the spread, which is simply the fast T3 minus the slow T3. Think of this spread as breathing in and out. When a market is trending higher, the fast line rides above the slow line, so the spread is positive. During a pullback, the fast line drifts back toward the slow line and the spread shrinks. If the trend is genuinely intact, the spread shrinks but never crosses below zero. The moment buyers step back in, the fast line pulls away again and the spread makes a fresh turn upward. That turn is what the strategy is looking for. Before acting, the EA applies a slope filter. The slow T3 must be moving by at least 0.10 times the current ATR measured over the last 3 bars. This keeps the strategy out of flat, directionless conditions where a breathing spread would just be noise. For a long entry, 3 things must line up. The slow line must be genuinely rising. The spread on both of the last 2 closed bars must still be positive, showing the pullback was shallow. And the spread must have just turned back up, forming a local minimum, meaning the newest value is higher than the one before it, which in turn was at or below the value before that. When all 3 agree, the strategy signals a buy. A short entry is the exact mirror. The slow line must be falling by the same amount. The spread must have stayed negative on both recent bars, and it must have just turned back down, forming a local maximum. When those align, the strategy signals a sell. Risk is handled with the ATR. The stop loss is placed 2 ATR away from the entry, and the take profit sits at 1.6 times that risk distance, giving a reward-to-risk ratio of 1.6 to 1. On top of that, there is a safety exit. If the spread sign flips against an open position, meaning the fast line crosses to the wrong side of the slow line, the trend is considered broken and the position is closed early, before the original stop is reached. Here's the core of the strategy as it appears in MetaEditor. At the top are the input parameters you can adjust. FastPeriod and SlowPeriod set the two T3 lengths, defaulting to 8 and 21. Volume factor is the Tillson smoothing factor at 0.7. Pullback and SlopeMinAtr define the slope filter on the slow line. And ATR period, ATR-StopMult, and RewardRisk control the risk model. Below the inputs, the strategy reads three recent spread values, labeled S0, S1, and S2, from newest to oldest. The long signal, called long signal, is true when the slow slope is above its threshold. Both S0 and S1 are positive, and S0 is greater than S1, while S1 is at or below S2. That last part is the fresh upward turn in the spread. When long signal is true, the code calls trade.buy, sending a buy order with the fixed lot size. The short signal is the mirror image. Short signal is true when the slow slope is below the negative threshold. Both spread values are negative, and S0 is less than S1, while S1 is at or above S2, which is the fresh downward turn. That calls trade.sell. For both sides, risk equals the ATR stop multiplier times the ATR. The stop loss sits one risk distance from the entry, and the take profit sits at the reward to risk multiple beyond that. It's a clean, symmetric structure that treats long and short trades identically. Let's bring this to life with a chart. On the price candles, you can see two smooth lines, the blue fast T3 and the red slow T3. Below them is a sub-panel showing the spread between the two lines, with a dashed zero line running through the middle. Watch how that spread breathes as the story unfolds. We open on the left in a healthy uptrend. The candles are stepping higher. The blue fast line is riding clearly above the red slow line. And in the panel below, the spread is comfortably positive, well above the zero line. This is exactly the environment the strategy wants, an established, still climbing trend. Around the third and fourth candles, the buyers take a short breather. Price pulls back, those two candles close lower, and you can see the blue fast line drift back down toward the red slow line. In the panel, the spread shrinks toward the zero line, but notice that it stays positive. It never crosses to the other side. That's the key. This is a shallow pause inside a trend, not a reversal. Then, on the fifth candle, the buyers step back in. Price closes strongly higher. The fast line pulls away from the slow line again. And in the panel, the spread makes a fresh turn upward, lifting off its local low while remaining positive. At the same moment, the slow line slope is still comfortably rising, clearing the ATR slope filter. All three conditions agree, and the strategy signals a long entry. You can see the buy marker on that candle. The stop loss is placed 2 ATR below, and the take profit sits at 1.6 times that distance above. From there, the trend resumes cleanly. The next two candles push higher with strong closes, the spread widens back out, and price reaches the take profit target at the marker above. The long trade is complete, captured on the resumption of an already established move. Now watch the character of the market change. After the peak, the candles begin to roll over. Price closes lower, the blue fast line curls down and crosses below the red slow line. And in the panel, the spread dips below the zero line for the first time. That sign flip is exactly the trend flip condition the strategy uses to abandon a long. Now the roles reverse. A new downtrend is forming, with the fast line below the slow line and the spread negative. A couple of candles later, we get the mirror image setup. Price stages a small bounce higher over the 11th and 12th candles. The fast line ticks back up toward the slow line, and in the panel the spread shrinks toward the zero line from below, but importantly, it stays negative. Again, a shallow pause, not a true recovery. Then, on the 13th candle, the sellers return. Price closes sharply lower. The fast line pulls away beneath the slow line, and the spread makes a fresh turn downward, rolling over from its local high while remaining negative. The slow line slope is now falling hard enough to clear the filter on the short side. The conditions align, and the strategy signals a short entry, marked by the sell marker. The downtrend then extends. The final two candles close lower and lower. The spread deepens further below zero, and price reaches the short take profit target at the marker below. The short trade is complete. Notice the symmetry. In both cases, the strategy did the same thing. It waited for a clear trend, allowed a shallow pullback while the spread stayed on its own side of zero, and only acted when the spread turned fresh in the trend's direction. It never chased the pullback itself. That patience, entering on the resumption rather than the pause, is the whole idea behind this approach. And that brings us to the end of our deep dive into the Tillson trend resumption strategy. Today we explored how two Tillson T3 lines create a breathing spread, how a slope filter keeps the strategy focused on real trends, and how it looks to enter on the resumption of a move after a shallow pullback, managing every trade with an ATR-based stop and a reward-to-risk target. Remember, everything in this video is for educational purposes only. It is not financial advice, a recommendation, or a solicitation to trade, and all trading involves real risk, including the risk of loss. If you found this breakdown helpful, please like the video, subscribe for more MT5 strategy analyses, and leave a comment with the strategy you'd like me to cover next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.